Well, Singapore is expecting slower economic growth next year as industries recover at an uneven pace and inflation risks remain. Growth is expected to come in at between 3 and 5%. Bernanta Noto with more.
As the pandemic persists, travel restrictions are expected to cap the recovery in aviation and tourism-related sectors. Visitor arrivals may remain weak and dampen retail recovery. Demand in the food and beverage industry may also see a slow pickup, as dine-in restrictions could remain in place. On the other hand, growth prospects for export-oriented sectors such as manufacturing and wholesale trade remain strong on the back of robust external demand. However, inflation is set to remain elevated too. In fact, Singapore's overall inflation climbed to 3.2% in October, the highest in more than 8 years.
For us as a small and open economy, this inflation has come largely on the back of higher external inflation due to increases in the global energy and food commodity prices and somewhat persistent supply bottlenecks in key global industries and transport hubs.
Rising cost of materials on top of higher wages in growth sectors will also add to business overheads.
Firms across various industries have been ending their wage freezes, and they're also reversing the wage cuts that they implemented in 2020. So we expect wage growth to continue strengthening with the reopening of the economy, and demand for workers will also likely rise for some of the sectors when they start to operate at a larger capacity.
Analysts say the higher costs could be passed on to consumers.
Over the last couple of months, we have seen businesses more willing to pass on the higher costs because businesses are realizing that consumer has the purchasing power. Why? Because labor market condition has stabilized, they're more willing to spend, and they can take the slight increase in the costs in stride.
Food prices have been on an upward trend because of the rise in prices of imported raw food, like meat and vegetables. There will also be some pass-through from rising wage costs next year, given that the progressive wage model is being rolled out to the retail sector.
For now, Singapore says full-year growth for this year is set to come in at around 7%. That's at the top end of its previous forecast range of 6 to 7%.